The IRS is currently tracking a massive $688 billion shortfall in unpaid revenue. Prepared filers claim massive refunds, while unprepared Americans pay thousands in unnecessary penalties. But here's what they don't tell you about 5 hidden legal shields. You have until the stroke of midnight to execute specific maneuvers shielding your capital from seizure. These final moves guarantee you walk away from tax day with your savings account completely intact. Right now, an invisible tax is eating your savings because you've been told the April. In reality, for the economically literate, it is a window of immense power. Consider that $100 in 1970 could buy a full week of groceries, but today it buys only $17 worth of value. Inflation is the silent thief, but your tax liability is the loud one knocking at the door. Since the modern income tax was solidified in 1913 following the 16th Amendment, the system has grown into a labyrinth that Milton Friedman once warned was designed to be incomprehensible to the average citizen. We are currently witnessing a tax gap so wide it threatens the very stability of the department. As Commissioner Danny Werfel and Secretary Janet Yellen oversee the collection of trillions, the individual taxpayer is often left wondering if they are the ones footing the bill. But before the final bell rings at midnight on tax day, there are 5 specific maneuvers, legal, statutory, and highly effective, that can turn a crushing tax bill into a strategic investment in your own financial future. This is the moment where the informed separate themselves from the indebted. The clock is ticking toward midnight, but behind the scenes, a massive bureaucratic engine is humming with a precision that would make a Swiss watchmaker jealous. At the helm of this operation is Danny Werfel, the Commissioner of the Internal Revenue Service. Confirmed in March 2023, Werfel isn't just a paper pusher. He is effectively the CEO of a financial institution that processes nearly $5 trillion in tax revenue annually. Above him sits Janet Yellen, and the Secretary of the Treasury, who oversees the IRS. As together, they represent the ultimate house in the world's largest casino, managing the collection of capital that fuels everything from highway construction to hypersonic missile defense. To understand why your last-minute moves matter, you have to understand the scale of the tax gap. This is the chilling difference between what the government is legally owed and what it actually collects. A figure estimated at a staggering $688 billion annually for the 2021 to 2022 tax years. That's more than the entire GDP of many developed nations. To bridge this gap, Werfel's agency leverages a complex web of enforcement and administration, guided by the Internal Revenue Code. It's a legacy that stretches back to 1913, when the 16th Amendment fundamentally changed the relationship between Americans and their money. Think of the IRS like a giant, invisible utility company. Just as you pay for electricity to keep the lights on, the IRS collects the subscription fee for living in a modern society. But this utility company is currently under Yellen's leadership and Werfel's execution. The agency launched the IRS Direct File pilot in 2024. This move signals a seismic shift toward a future where the government might one day compete directly with the private software giants like TurboTax and H&R Block that currently dominate the market. Amidst this tension between enforcement and assistance stands Aaron M. Collins, the national taxpayer advocate. While Werfel and Yellen focus on the macro scale of billions, Collins leads the Taxpayer Advocate Service, an independent organization within the IRS. Her job is to ensure that the individual taxpayer isn't crushed by the sheer weight of a system that processes over 160 million individual returns. It is a delicate balance of power, where one error in code can lead to billions in lost revenue, and one well-timed contribution can save a family's financial future. Every April 15th, these figures manage a flow of capital that dictates the health of the entire American economy. The internal logic of the U.S. tax code operates on what Milton Friedman might call a series of incentive structures hidden behind a veil of bureaucratic complexity. While the average person sees April 15th as an immovable wall, a total dead end for the previous year's finances, savvy taxpayers, by leveraging 5 specific statutory shields, an individual can retroactively rewrite their financial history for the prior year. The first and most accessible tool is the traditional IRA. It functions, quite literally, as a financial time machine. Even though the calendar year ended months ago, the Internal Revenue Code allows you until the midnight deadline to contribute up to $6,500 or $7,500 if you are age 50 or older, and deduct that amount directly. It is as if the casino is allowing you to change your bet after the dice have already stopped rolling. The second shield is the Health Savings Account, or HSA. For those enrolled in a high-deductible health plan, the HSA is what economists often call the holy grail of tax-advantaged accounts. You can contribute up to $3,850 for individuals or $7,750 for. This creates what is known as a triple tax advantage. The money goes in tax-free, it grows tax-free through investments, and it comes out tax-free for medical expenses. In a world where inflation eats your purchasing power, failing to utilize this shield is effectively leaving high-velocity capital on the table for the Treasury to claim. For the entrepreneurs, freelancers, and small business owners, the group often hit hardest by the double hit of employer and employee taxes. The SEP IRA acts as a massive defensive barrier. This simplified employee pension plan allows for a contribution of up to 25% of net earnings from self-employment, capped at a staggering $66,000 for the 2023 tax year. Perhaps most importantly, if you file for a formal extension, the window to fund this account stays open until October 15th, giving the business owner another 6 months to find the liquidity necessary to slash their tax liability. But while these deductions lower the income the IRS sees, the fourth shield, the Earned Income Tax Credit, or EITC, is a direct strike against the tax bill itself. This is a refundable credit, meaning if the credit exceeds what you owe, the government actually cuts you a check for the difference. For a working family with 3 or more qualifying children, this can be a direct cash injection of up to $7,430. It is a mechanism designed to offset the regressive nature of other taxes, providing a floor for those in lower to moderate income brackets. Finally, we have the tactical maneuver of Form 4868, the automatic 6-month extension. Many people view this with fear, assuming it triggers an audit, but it is actually a critical survival tool. While it does not delay the payment of the tax itself, it vaporizes the failure to file penalty. At 5% of the unpaid tax per month, that penalty is 10 times more expensive than the 0.5% failure to pay penalty. In the cold calculus of the IRS, missing the deadline to simply file the paperwork is the most. Understanding these shields isn't just about math. It is about mastering the rules of an economic system that rewards those who know where the levers are hidden. While we focus on individual savings, the Internal Revenue Service is staring at a hole in the bucket that would bankrupt almost any other nation on Earth. This is known as the tax gap, the staggering chasm between what the law says is owed and what the Treasury actually collects. For the tax years 2021 and 2022, the IRS estimated this gap reached a jaw-dropping $688 billion annually. To put that figure in perspective, $688 billion exceeds the entire annual economic output of nations like Austria or Israel. It is the invisible friction in the American economic machine, a massive shortfall that Treasury Secretary Janet Yellen and Commissioner Danny Werfel. However, as the legendary Milton Friedman often observed, humans respond to incentives rather than mere decrees. When the rules of the game change, the behavior of the entire population shifts like a massive school of fish reacting to a predator in the water. We saw this most clearly with the Tax Cuts and Jobs Act of 2017, a legislative earthquake that fundamentally redrew the map of American personal finance. Before this law took effect, roughly 30% of taxpayers went through the grueling process of itemizing their deductions, meticulously tracking mortgage interest and charitable gifts to shave down their bills. But the 2017 Act drastically increased the standard deduction, effectively simplifying the process for millions while simultaneously moving the goalposts for tax strategy. What started as a move towards simplicity was about to become a massive shift in how wealth is protected. Almost overnight, the percentage of Americans who itemized their deductions plummeted from 30% to a mere 10%. This wasn't just a paperwork change, it was a macroeconomic pivot, with traditional below-the-line deductions becoming irrelevant for 90% of the country. The strategic focus shifted toward above-the-line adjustments. These are the statutory shields like IRA and HSA contributions that directly lower your adjusted gross income, whether you itemize or take the standard deduction. These tools have become the primary bridge for the middle class to reclaim their agency in a system that Friedrich Hayek once warned could become a road to serfdom through sheer bureaucratic complexity. Today, the $688 billion tax gap remains a point of intense political friction. But for the savvy taxpayer, it serves as a reminder. In an economy governed by complex statutes, the difference between a high tax bill and a comfortable refund is often just a matter of technical literacy and timing. The digital evolution of the Internal Revenue Service marks a legacy shift that few saw coming, yet it threatens to upend. For decades, the complexity of the American tax code served as a lucrative barrier to entry, allowing software giants like TurboTax and H&R Block to act as the essential gatekeepers between the citizen and the Treasury. However, the introduction of IRS Direct File, piloted in 2024, represents a fundamental pivot in how Commissioner Danny Werfel and Secretary Janet Yellen. This isn't just a website update, it's a government-backed disruption of the private tax prep market. By offering a free, direct electronic filing option, the IRS is attempting to modernize an infrastructure that has long been criticized for its inefficiency, all while trying to close a staggering $688 billion annual tax gap. This gap, the difference between taxes legally owed and those actually paid, is the primary driver behind the agency's aggressive push toward digital efficiency and increased enforcement. Yet, as the system becomes more automated, the burden of financial literacy remains firmly on the shoulders of the taxpayer. The transition from the 1913 ratification of the 16th Amendment to our modern era shows a clear trajectory. The tax code has evolved from a simple revenue tool into a complex instrument of social and economic engineering. When the Tax Cuts and Jobs Act of 2017 nearly tripled the number of people taking the standard deduction, it didn't just simplify filing, it fundamentally changed the incentives for wealth preservation. Understanding these shifts is the difference between financial stagnation and sovereignty. To the uninitiated, the tax code is a minefield of penalties. To the informed, it is a roadmap of incentives. Mastering these 5 last-minute moves is not about beating the system, but about speaking the same language as the architects of the economy. In a world where inflation and policy shifts can erode your purchasing power overnight, tax literacy is your most potent secondary income stream. As we look toward future legislative shifts and the continued digital transformation of the Treasury, one truth remains. The most expensive mistake you can make is not knowing the rules of the game you are already playing. Money talks, but only if you understand the language. Subscribe for more stories behind the economy.